Hi, and welcome to today's video. Today's video is all about the housing market. And one of the most consistent questions I get from clients is, when is the shoe going to drop? Are we going to experience another 2008 housing crisis? Luckily, I don't think that's going to be the case. But today we'll talk about new home starts, a leading economic indicator, building permits, another leading economic indicator, some supply-demand imbalances, a little bit about the rate market, and what we can expect moving forward, as no doubt the housing market remains stable, but there's certainly some short-term headwinds that we'll need to overcome. In our first chart, we'll take a look at building permits. These are new, privately held units that have been authorized to be built. As you can see, coming out of 2008, the housing market had a tremendous run up until the 2020 COVID-19 pandemic. On the back of a reopening and a lower interest rate environment, we continued our trajectory upwards. However, as inflation hit the economy and the Federal Reserve was forced to raise interest rates dramatically over a very short period of time, you can see it's come down quite a bit as builders become disincentivized to build new units. In this next chart, we'll take a look at housing starts, a key leading economic indicator. In this chart, it represents new, privately owned homes currently in construction. Housing starts represent new construction activity and can vary greatly depending on region and the supply-demand of homes in that area. Higher mortgage rates, no doubt, almost touching 8%. Can't believe we're there, but 8% has drastically slowed the housing market and the appetite for new construction as home builders continue to struggle in this higher rate environment. In this next chart, we'll take a look at month's supply of new home inventory. This is simply a ratio of new homes for sale versus new homes sold. As you can see, the supply of available homes has begun to increase as the broader housing market has begun to slow. As some would say, we were previously in a seller's market in the low interest rate environment previously. We may now be moving into a buyer's market. However, with interest rates elevated at about 8%, it's tough to make that call at this time, but certainly there's opportunities, or will be in the near future, for folks that remain patient in the housing market. Well, it truly is an interesting time in the real estate market currently, and with builders continuing to struggle in this elevated interest rate environment, there's clearly an opportunity for buyers here in the short term. I hope these insights were helpful, and as always, if you'd like to discuss further or have additional questions, please don't hesitate to reach out. Until next time, take care.